Imagine a world where military maneuvers aren't just about defense, but a hidden game of high-stakes economics. A world where a seemingly distant geopolitical move could directly redefine your job security, your investments, and even the price of groceries. We're talking about a potential future, specifically post-2026, where a renewed US administration could link global defense to cold hard cash. And the global superpower on the other side, China. Their response won't be with battleships, not directly anyway. It will be an economic counterpunch aimed squarely at the wallet of the American consumer and the stability of global markets. This isn't just about headlines, it's about your money being on the line. Now, you probably hear about global politics, trade wars, or distant naval deployments and feel a sense of overwhelming confusion. It's natural. The news often bombards us with complex strategies and jargon that make it incredibly hard to connect the dots. You might wonder how a new president's foreign policy could possibly impact your savings account, or how tensions between nations could suddenly make your favorite products more expensive. It feels like you're caught in a financial current, driven by forces you don't understand, let alone control. You work hard, you save, you plan for the future. But then another geopolitical storm cloud gathers, and suddenly, that security feels fragile. That anxiety, that feeling of being unprepared for impending global shifts is exactly what we're going to address today. Because understanding these forces is the first step to protecting yourself and even finding opportunities. Let's unpack what we're really talking about here. The core of this story revolves around a potential future US administration, likely under a familiar leader, and a significant shift in how America views its global alliances. After 2026, there's an expectation that demands for allied defense burden sharing will intensify dramatically. This isn't just asking allies to contribute more troops or equipment. It's about linking military presence, specifically naval protection, to explicit financial contributions. Think of it as a very direct, pay-to-play model for global security. On the surface, it looks like a military funding debate. But dig deeper, and this is a profound economic strategy. Securing vital trade routes, especially energy choke points, isn't just about naval power. It's about controlling global commerce. It's about asserting economic leverage in every major ocean, from the South China Sea to the Strait of Hormuz. These deployments are less about traditional warfare and more about guaranteeing the flow of goods and resources that fuel the global economy. Now, how does China respond to such a bold strategy? Beijing is highly unlikely to engage in a direct military confrontation. China's strength lies in its economic prowess and strategic resource control. Their counterpunch will be a series of calculated economic maneuvers designed to hit the US where it hurts most, its wallet and its industries. One of the most potent tools in China's arsenal is its near monopoly on rare earth elements. These aren't just obscure minerals. They are absolutely critical for everything from your smartphone to electric car batteries, advanced missile systems, and renewable energy tech. Imagine China restricting access to these essential materials. Suddenly, entire US manufacturing sectors, particularly high-tech industries, would face crippling shortages and soaring costs. This could bring production lines to a standstill and delay critical innovation. Beyond rare earths, China has other powerful levers. They could impose targeted trade tariffs on specific US exports, making American goods uncompetitive in global markets. This would hurt US businesses, farmers, and ultimately American jobs. Another move could be investment freezes or capital controls, impacting American companies operating within China. This would disrupt supply chains and reduce profitability for major US corporations. These aren't abstract possibilities. They are strategic plays designed to exert maximum economic pressure, forcing the US to reconsider its stance or endure significant domestic economic pain. The International Monetary Fund and the World Bank have already signaled the vulnerability of key US economic sectors to escalating US-China tensions. We're talking about industries like technology, advanced manufacturing, agriculture, and even consumer goods. A new round of intense trade friction, triggered by these naval demands and China's response, could easily disrupt global supply chains. This disruption would mean higher prices for imported goods, from electronics to clothing. It would lead to increased inflation as companies pass on higher costs to consumers. Your everyday expenses could climb significantly, eroding your purchasing power. Beyond consumer costs, consider your job security. If industries are hit by rare earth restrictions or tariffs, companies might downsize, freeze hiring, or even relocate production. This directly impacts livelihoods. For investors, these shifts create massive volatility. Stocks in vulnerable sectors could plunge. Global market uncertainty would lead to a flight to safety, impacting everything from bond yields to real estate values. Your retirement savings, your investment portfolio, even the value of your small business could be directly exposed to these geopolitical cross-currents. It means heightened investment risks, but also, for those who understand the landscape, potential opportunities. So, why does this matter to you today, even if 2026 seems a bit far off? Because these aren't sudden events, they are slow-moving tectonic plates shifting beneath the surface, building pressure. The decisions made in Washington and Beijing in the coming months will set the stage for these future dynamics. Understanding them now allows you to anticipate rather than react. It's about recognizing that what might appear as a military or diplomatic issue is, at its heart, an economic battleground, and your personal finances are right in the middle of it. This isn't about fear-mongering. It's about connecting the dots between complex global strategies and your daily reality. It's about realizing that geopolitics isn't just for politicians or experts. It directly affects your wallet and your future. If this all sounds overwhelming or like information you hadn't fully connected before, please know it's not your fault. The intricate web of global economics and geopolitics is designed to be complex. Traditional news often presents these issues in isolation, failing to draw the critical link to your personal finances. It's easy to feel lost in the noise. But now, you're equipped with a clearer understanding of the stakes. This knowledge empowers you to take proactive steps. Consider practical financial strategies like portfolio diversification, spreading your investments across various sectors and geographies to mitigate risks in vulnerable areas. Explore sector-specific hedging, which means making investments that benefit when certain other investments decline. Look into companies that prioritize supply chain resilience. These are firms actively working to diversify their sourcing away from single points of failure, making them less susceptible to geopolitical shocks. By understanding these impending shifts, you can mitigate risks and potentially capitalize on opportunities that arise from this evolving global landscape. The future of your finances hinges not just on market trends, but on being acutely aware of the geopolitical chessboard. Stay informed, stay vigilant, and stay prepared. Your financial future depends on it.